Welcome back to the Accounting and Tax Academy. I'm Tony D'Angelo and today we're talking VAT, Value Added Tax. And in this video, we're going to cover what is VAT, when must you register for VAT, when do you start charging VAT, special VAT schemes, and finally how to report and file VAT returns. Before we jump into today's video, be sure to click the subscribe button as well as the notification bell icon to stay up to date with our future videos. This really does help us get our content out there and to keep providing you with free quality advice from real qualified accountants. So now we're all subscribed, let's get into the ins and outs of VAT. In simple English, VAT or value added tax is an indirect tax charged on most goods and services in the UK and across the European Union. Quite often when you buy a product or service that is VATable, you will automatically have paid up to 20% in this tax, sometimes without even realising it. The VAT distribution chain can be quite complex, but the underlying principle is that VAT is paid by the end consumer of the product or service. In some countries it is known as GST or Goods Services Tax, but the principle remains the same. VAT is collected by businesses who have registered for VAT with HMRC here in the UK. So that includes limited companies, sole traders, partnerships, and limited liability partnerships. They are responsible for collecting the tax where necessary and paying it across to HMRC. This sounds like a lot of responsibility, but there are some perks that come with VAT registration, which we will explore throughout this video. There are generally three rates of VAT which are applied to goods and services here in the UK. The standard rate, which is currently 20%, the reduced rate, currently at 5%, and the zero rate. Goods and services may also be exempt. VAT exempt items are outside of all VAT schemes and are not taxable. There are advantages and disadvantages to registering for and applying VAT, particularly if your business is below the mandatory current threshold. Registering for VAT really depends if the numbers work for you or your business, so it's well worth getting a VAT evaluation done. Click on the link below for more information on this. What are your thoughts and experiences on being VAT registered as a business? Let me know in the comments box below. This table illustrates a brief overview of the different UK VAT rates and typical goods and services that are levied at each rate. So for example, children's clothing, books and food other than luxury foods are zero rated, so they are still VATable but at 0%. It sounds bizarre, I know, but most goods and services, however, will be VATable at the standard rate of 20%. For a full table covering all categories of goods and services at the different rates, click on the link in the description box below. Now, this is where it can get a little tricky. Legally, you must register for VAT when either of these criteria are reached. Your VAT taxable turnover exceeds the current threshold of 85,000 on what is known as a cumulative 12-month rolling basis. You expect your VAT taxable turnover to exceed the threshold in a single 30-day period. You only sell goods or services that are exempt from VAT, but you purchase goods to use in your business to the value of more than the threshold from VAT registered suppliers in the EU. So let's illustrate criteria 1, the most common trigger, with an example. You are in business operating through a limited company and your 12-month cumulative rolling VAT taxable turnover is as follows. Between the 1st of Jan 2019 and 31st of December 2019, it is £76,000. So by the 31st of December 2019, you are not legally obliged to register for VAT as your VAT taxable turnover has not exceeded the £85,000 threshold. Between the 1st of February 2019 and the 31st of Jan 2020, it is now £80,000. Once again, by the 31st of Jan 2020, on this 12-month rolling basis, you are still not legally obliged to register for VAT as your VAT taxable turnover has not exceeded £85,000. But it is very close, and the likelihood it will surpass the threshold is now quite high based on the numbers. The second point of you expect your VAT taxable turnover to exceed the threshold in a single 30-day period can come into play here, and if that is the case, you should be looking to register for VAT immediately. Between the 1st of March 2019 and the 28th of February 2020, it is £90,000. Now, in this 12-month rolled over period, your VAT taxable turnover has hit £90,000 by the end of the 28th of Feb 2020. You must now legally register for VAT, and you have to do it within 30 days of meeting the criteria. So in this example, you will have until the 31st of March 2020 to submit your VAT registration. And what's more, let us suppose you are making an application to register for VAT midway through March 2020, you can backdate the effective registration date. So for example, make it the 1st of March 2020. But a word of caution here, as you must start charging VAT from the effective date. More on this in the next section of the video. And another word of caution, if you know your turnover will reach the threshold soon, you should allow enough time to register. This can take anywhere from 5 days to 6 weeks. However, in our experience, 80% of applications are approved in the first week along with a VAT registration number. If you fail to notify HMRC in time, you may be liable to pay a penalty. You can register online directly with HMRC or use the services of an accountant to do this. Remember, you can register for VAT voluntarily even if your VAT taxable turnover is below the current threshold. It may be beneficial to do this prior to reaching the thresholds if the numbers work for you and your business. You must start charging VAT from the first day of the second month after you exceed the threshold. So in our previous example, the threshold was exceeded at some point in February 2020. Therefore, you must start charging from the 1st of March 2020, and this will be your VAT registration effective date. Bear in mind, if you do backdate your VAT registration effective date, then you will have to charge VAT on any sales invoices you raised earlier that did not have VAT levied if they fall into the VAT registration period. So for example, if you raise an invoice on the 3rd of March 2020 with no VAT, as at this point you are not officially VAT registered, once your VAT registration comes through with an effective date of the 1st of March 2020, you will have to raise a VAT invoice. And likewise with any VAT incurred from the 1st of March 2020, you can now claim this back as what is known as input VAT. The most common and popular VAT scheme in the UK for small businesses is the standard rated scheme. VAT is usually administered on a quarterly basis, in other words, every 3 months. However, there are other special VAT schemes worth mentioning. Flat rate scheme for small businesses. This scheme is very popular amongst contractors, freelancers, and smaller types of businesses with low VATable expenses. The flat rate scheme was designed to make administering VAT easier, and that's exactly what it does, as you just pay over a fixed rate to HMRC. The flat rate can be extremely beneficial for some types of businesses, and we have created a full list of these along with the flat rate percentage. Click on the link below to access these. In order to join the flat rate scheme, your business's taxable turnover should not exceed £150,000 per annum, excluding VAT, or less in the next 12 months. VAT Mini One-Stop Shop, also known as VAT MOS, is a way of paying VAT on supplies of certain digital services if either you are a UK business who makes supplies to consumers in EU member states, or your business is based outside the UK and EU and you make supplies to UK or EU consumers. It only applies to what is known as businesses to consumer digital services and not business to business. However, if your sales are not being made as a business, for example, as a hobby activity with occasional sales, rather than a commercial activity, these rules do not apply to you, and you do not need to register for VAT or use VAT MOS. Typical examples of a business to consumer digital supply are website supply or website hosting services. Now, VAT MOS is relatively speaking a complex process. You have to pay based on the rate of VAT applied in the country where the customer bought your product, and not the rate prevailing in the country where you are the seller. It was introduced to enable UK businesses to pay VAT over to HMRC in a single transaction, rather than registering for and paying VAT in multiple EU countries. VAT MOS warrants a separate video in itself, and we will be releasing one very soon. So make sure you click on the bell icon to find out exactly when we release it. There are also some other special schemes, such as the cash accounting scheme, the annual accounting scheme, and the retail scheme for retailers. But to keep this video brief, we'll leave it there for now. If your business is VAT registered, then a VAT return is required, usually every quarter, to inform HMRC how much VAT you have paid and how much you have received. All VAT returns are filed online and can be done through a reputable accounting software such as Xero or QuickBooks. You can submit your VAT returns using HMRC's own online software, but only if your VAT taxable turnover is below the 85,000 threshold, as we are now in a making tax digital world since the 1st of April 2019. The deadlines for submitting a VAT return to HMRC and paying any liability are usually the same. Both must be completed 1 month and 7 days after the end of the VAT accounting period. So a return covering the quarterly period 1st of Jan to the 31st of March needs to be submitted by the 7th of May, with any liability be paid by the same date. Your business may be due a refund of VAT, and if this is the case, the submission deadline is still the same, and quite often HMRC will refund the VAT within 30 days of receiving the VAT return. We have a comprehensive blog post about registering and reporting VAT returns on our website. Click on the link below if you want to know more. Our next video in our VAT series will go into exactly how to file your VAT return, as well as going into some of the penalties, surcharges and interest you can be faced with if you don't meet the deadlines associated with VAT and other potential wrongdoings. If you can't wait until then you can read our comprehensive blog post about registering and reporting VAT returns on our website. Just click on the link below. I hope this video has helped you understand the ins and outs of VAT and taken you one step closer to knowing your numbers. Leave us a comment below if we've cleared up any of your VAT questions, and finally, make sure you like and subscribe, as this really does help us to get our content out there. This is Tony D'Angelo for the Accounting and Tax Academy, and as always, thanks for tuning in.